Hello, 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 hello. Good afternoon, everybody. Welcome to the stream. This is True Demon, the Devil Stockbroker. Let's get started. All right. How's everybody doing this morning? Hey, Boomer Assassins, welcome, welcome. Whopper, howdy. Okay, let's begin things with the overall market. Figure out where we're currently at. Been hanging out in the trading floor for most of the day. Figured now was a great time to actually get some information out to everybody. Okay. There we go. Now we got some charts. Hey, Boomer Assassins, I did not see that VIX chart, actually. Was that something that you just sent in the trading floor a little while ago? If so, I definitely missed it, but, oh, I see it now. I got it. The cup and handle on the VIX. Yeah, if we did get a truly massive rug pull, like I am suspecting we may, then we could see the SPY drop down to as low as 361 is kind of my outlier target. 362 is something a little bit more realistic. I was waiting on this big bear pennant that was forming here. We had a bear flag that was forming the day before, back on the 19th, and instead of breaking out, it just kept zigzagging its way out until eventually it finally broke above, and we never revisited for the rest of the day until we hit our new highs the morning after. So now what we ended up having was a bull flag that did the exact same thing. It just kept zigzagging its way down until eventually, like, it failed its third retest. That third test failure to break above is right at the moment where everything started to come apart for the SPY and all the bulls trading the market this morning. So now we're getting a full measured move off of this downward move, and if you take the flagpole off of that move and you move it to the breakout point, then that is your lowest low. That is your take profit target. As I said, 362 is pretty much that's my take profit right there. If we see the SPY pull back to there, then that's good enough for me. But honestly, with the way that the market is shaping up, we're hammering out a bottom right now. Even if the market does keep getting, like, if the market continues being this choppy, then yes, there's going to be plenty of opportunities to short. Absolutely. But the way I see it is, if we get through to the end of October and the market hasn't completely collapsed, then we're going to move into that holiday rally that we talked about. There's going to be a critical moment in November between elections and between the Fed FOMC meeting. Those two things are both happening in the first week of November. After that ends, if the market doesn't completely capitulate, which right now we've been hammering out a bottom, or at least it looks to me like we're hammering out a bottom for this year, I think that what will end up happening is we'll see another surge. Right now, we've got the bond market is finally starting to come back into alignment with where it's been for the last, I don't know, like year. Let me go ahead and over to my bonds. Where are my bonds? Here we go. So over here on the right, we see that finally the bond market is readjusting to be way more bearish. The yields are shooting up. The 10-year is on an absolute tear today. It's been ripping since the morning of the 19th, and that pretty much confirms exactly what we thought was going to happen once the Bank of England decided that it was done buying up bonds and gilts for the sake of the pension funds. They gave everybody their opportunity to exit, and now they were stepping away. Now that that's happened, the bond market has been free to readjust itself, and we're seeing a resumption of that crash as yields skyrocket, prices of the bonds come down. That's what we mean. And I don't want this to confuse people. Yields are the amount that you see in fixed returns from a bond. When bond yields are going up, that's the market yield rate. That causes the price of existing bonds to fall. So that's why we say there's a bond market crash when the yields are going up. And a lot of people who are new to trading get really confused by this. Like, I don't understand. The yield's going up. That should be a good thing. It is a good thing to people who want to buy bonds now. It's a bad thing for people that want to hold on to existing bonds. People that are holding on to an existing bond that had a yield of like 3.6%, now they can turn around and get a yield of 4.2%. That's a difference of a 0.6% rate of return. That's quite a difference. So they have an opportunity to sell their existing bond to get a new bond with a higher rate of return. That's why the sell-offs happen, and that's why the price and the yield of bonds are inverse to each other. So that's why when I say bonds are crashing, even though you see this chart going up, that's why. Bond yields going up means bond prices going down. So let's go ahead and move over to some of our other indices. We've got the Dixie, which is the dollar index. This thing has been hammering out a bull pennant for a long time now, and we're starting to see higher lows forming within the pennant. So we've kind of got a pennant within a pennant here, and that is a bad sign for the market. Good sign for the dollar. As the dollar strengthens, that causes more stable and value investors, people who are looking to move their money into safe assets. They'll put their money in the dollar, the US dollar, and take it out of equities and assets. That gives them a safe haven to put their cash for the time being, while they look to move to other opportunities and assets. And when this happens, this means that selling in stocks and bonds happens. So when you couple existing bonds being sold off with the dollar ripping to the upside, and if we do break out of this channel that the dollar is currently in, then yes, it will rip. We'll see new highs in the dollar, and we'll start to move past this 114.8 level that we peaked at back in September. But this will result in a fleeing out of stocks and equities. Paul Trippy says, I'm surprised Tesla is still holding these ranges, still up from 2020 in a good amount with a terrible PE ratio. I am actually kind of surprised, but at the same time, not so surprised. I was actually bullish on Tesla before their earnings, and it was easy for me to be bullish because I literally bought the exact bottom in Tesla, and don't ask me to ever do this twice because I'll never be able to buy Tesla at the bottom again. It just was a perfect storm situation. But I bought it right here, and I sold it here once I saw that there was an opportunity to exit. Once Tesla finally had its bad earnings, I was expecting for any good news in Tesla to cause it to rip, but instead it sold off pretty badly. I still ended up taking a profit anyway. This is not a big deal to me. This was a small bet compared to the rest of the portfolio. That's why diversification helps you out. But with Tesla's current situation, the way that I was thinking was if even the slightest bit of good news hit Tesla, if they, if they really beat on their revenue targets, their earnings, their sales, or if they, were looking to purchase a new facility, if their guidance was good, anything would give them a chance to see a big reversal rally. Didn't happen. So instead, they bounced off their floor and they set up a new lower low in the morning volatility. I waited that out and I waited for the bounce, which you can see that happened in the late morning. We got an opportunity, and as soon as I saw this flagging down, I was like, that's good enough. I'll just exit here, take some profit. It wasn't a big profit, but it was good enough. I got out more than my cost basis, and that's plenty for me to take that risk off the table. And now I'll just let Tesla do what Tesla do. The way that I feel about Tesla right now is that it still is pretty close to its bottom. Even if investors are losing faith in the company because Elon's, being a little bit like bipolar about his decision making for the business, I'm not. I'm not convinced that Tesla is just going to crash and die and go away. And like, I don't think that that's, I don't think that that's in their future, at least this year. I think that what will end up happening is that next year the entire market will drag Tesla down as economic conditions continue to worsen by next year. Things always tend to get worse right after Christmas. So I'm kind of waiting for that to happen. But over the long run, man, like I want to buy as much Tesla as I can get my hands on. I used to have 5 shares of Tesla back when it was like $300 because I bought right before they split their stock and then went on that short squeeze. And I sold their stock for like I can't remember how much I got it for. It was so long ago, but it was a fantastic trade. But I think like, man, if I'd have just held on to those 5 shares, I could have turned that 300. I could have turned that 1 share of Tesla that I bought for like $300. I could have turned that into $5,000 if I'd have just held and waited out this whole thing. But I sold right before the COVID crash happened, and I was so happy with how it ended. So I'm just looking to get better at this whole game and continue to buy Tesla over time. Hey, Silverback Stonks. Thanks for asking. Yes, we do have a Discord. You can join the Hell's Trading Floor Discord by going to discord.gg/Hell's Trading Floor. You can sign up on our website at hellstradingfloor.com. Our Discord actually is quite extensive. We have a lot of resources that help people do research, and we actually have our own proprietary bot that we're building new technical analysis tools into. I'm actually looking forward to doing a showcasing of our new bot with all the latest changes that we've done on it. Our resident developer, Mr. Flabbergank, has been working really hard on this thing, so shout out to him. The improvements on the bot have allowed it to set up some really excellent technicals and just kind of automate the process for us. I see a lot of people just screaming at me to look at AMC, so I'm going to go take a look at AMC now. I see. Oh wow, interesting. So we've got a huge volume candle and a bullish crossover on the MACD. It's not so good for me. I actually just sold some calls on AMC today, so I need to go and check that out and see if I can get out of those. Nah, I'm not ready to get out of those. Those are expiring this Friday anyway, so we'll see how that goes. But this is just kind of like, I'm looking at this like this is some volatility just to see, just to get a few people to buy a few like last minute calls for Friday. This is what the market maker just loves to do. They love to just pump it on Thursday right before the market close, get people into their calls, those out of the money calls for the week, and then pull the rug out from under them on Friday and have all of those expire worthless. So I'd be really careful here. This is jacking up volatility, and it's not actually a bullish setup right now. Instead, what we have is we've got a double top right here, and we've set up a new lower high that matches up with this. You're actually, AMC got rejected by previous support right here, and now you're about to hit another layer of previous support that's now become resistance. So these are various levels of liquidity. AMC is getting rejected at this level, so I'm expecting AMC to retest this floor, and you'll see it back at 611. I'm worried AMC might actually close below 6 this week. I would be careful. I wouldn't go long here, not just yet. I love AMC, don't get me wrong, but got to be smart and got to be really careful about jumping in when they do this. When they pump these tickers like this, that's just to get people to buy into some YOLO calls right at the last minute so that they can take your money. I can go ahead and check Ape also. Yeah, no problem. What concerns me here is that they have a lot of control over this over these tickers right now. You can tell by the barcoding on the 5-minute. The barcoding is pretty severe. Right now, they're dragging the price around wherever they want. Ape is a lot worse than AMC, but at least Ape is forming a cup. And you can see the volume direction candles are dragging it upwards slowly. Even on the down move, even on this down slope here, all the way down to here, you can see that the volume candles, the direction is distinctly bullish. Everything is heading on a slow trend to the upside. So this is actually quite bullish for AMC. This tells me that there's accumulation happening over the long term for Ape and AMC. But I would be really careful going long here. Especially because we got this big bear flag in front of us, actually. This is kind of concerning. Yeah, looking at Ape right here, I see that we're about to have our third test. We have, we have one test at the top and a test at the bottom. We've had 3 tests on either side of this bear flag, so it can go either way at this point. But I am kind of concerned that if it doesn't break this level and get up to at least 250 by the end of the week, that Ape is going to come back down and retest 150. I would be kind of worried. Watch this bear flag. Draw this on your charts and keep a close eye on it. If you get confirmation breakout and Ape forms some support above this line here, you see some trading going on above here, that is what you want. You want more trading to happen around 250 to give it time to build support here. That's what you want to see from this. I'm going to put on a visible range volume profile so that you can see where the support is. Notice all of this volume below this level. That's because of all this trading that happened here. You need to see an equal amount of trading up at these levels, because right now there's a big gap here, and if market makers can't hold it in below this area and it gets up to here and starts trading at this level for a prolonged period of time, it'll set up support at this level, and then it can make a new leg to the upside. But if they reject it here, then they're going to build more volume below this level, and that creates more resistance. So you got to be on the lookout for this and not trick yourself into going long too early. You got to let the market work for you. Thanks, guys, for joining the stream. I really appreciate having everybody here. If you are just coming in, please be sure to leave a like on the stream so that we can get some more folks in here so that we can teach everybody about how to read the market and take advantage of basically free money, as long as you can learn where to find it. We're going to go ahead and move back over to the rest of the market. We're going to go back to the SPY and check how everything is doing right now. Right now, SPY is finding some trouble getting back above 365. I'm going to drop down to the 3-minute actually because we're getting close to the end of the day. So this is what I was watching for those of you who are just joining in on the stream. I was watching for repeating bear flags showing up in the market. We got a big bear pennant right here. This one right here. You see this bear pennant coming down off of this declining impulse move. This breaking candle that closed below this level on the 3-minute is right at this previous level of support where our bear flag from yesterday had formed. This is what I wanted to see. And notice that we cut through this last area of support pretty quickly. We had another teeny tiny bear flag, really small one, right here. I'll go ahead and circle it for you guys. That little bear flag, just this move and flagpole and two levels of support resistance. That was the tiny bear flag, and you had a big kill candle that came in cutting straight through that last layer of support at 365.50, critical zone of support. And you can see that about 20-30 minutes later, we came back down to a new layer of support, went to retest that level, and formed this evening star as afterwards. So this is nice confirmation of continuation to the downside. I really like to see that. So I think that we're pretty much in the move. The trade's already underway. I've already got my short position in play right now. I'll go ahead and throw a paper trade in here so that we can capture the rest of this move. But this one's going to be a really small one. I have my other trades already set up. I'm going to go ahead and set this stop loss to the top of the previous bear flag. And I'm going to set my take profit to... We're going to go to 363.10 and do a one. We'll actually make it a nice even 1.5 risk reward ratio. That's close enough. It's kind of like, it's actually like a really bad setup now. It was way better when we were up here and we had seen we saw the trade opportunity right here in front of us. Over here, you would set your support at the top wick here of this bear pennant, and then you would set your take profit for the full length of the pole. And you see you get a much better risk reward ratio. This is where the trade actually happened today for Hell's trading floor. And you can see that we're halfway in the move. So now we're trying to break through this layer of support. We're actually forming yet another bear flag, and we already had this confirmation candle breaking through. Now we're retesting that resistance. And after this candle closes, pretty sure what we'll get is just a big red candle printing over it and engulfing this green one. I'll try to get a decent entry here. I'm going to have to drop my stop loss, which is not favorable. I don't like doing that. And this is not my ideal risk to reward setup. So I'm kind of breaking my own rules when it comes to, oh, here, now we're getting a little bit of a pump so we can get a better one. We're going to do a tiny trade on this one just to track it. But this is the kind of setup that I would do for a trade like this. Ideally, I would have gotten here as soon as this candle closed outside of the bear flag. It actually broke here. So I would have entered before this big red candle had printed, and we would already be in the position, and my stop loss would be right here in the body of this, or right at the top of this candle here at the top of this bear flag. Just because that was our previous resistance that we got rejected by. Now we got all this resistance below us, or I should say above us. So this is a good short play. The reason why I wouldn't take this trade with real money, this is a paper account, just to kind of show you how to trade these setups. The reason why I wouldn't take it is because it's only a 1.7 risk to reward ratio, I trade 2 to 1 every single time with my real portfolio. I'm always looking for a 2 to 1 or better setup. The reason why I do that is because it only requires me to win 1 out of every 3 trades in order for me to have a break-even account. That guarantees that as long as my win ratio is greater than 50%, I'm always profiting in the long run. I'm going to catch up with chat here really quickly. Thanks, guys, for joining in on the stream. If you're just coming in, just a reminder to hit the like button. We really appreciate it. FNGR. This ticker has shown up before. I've heard of FNGR before. Finger motion. Yeah, it is running. That's actually a really nice move. Let's go check this on the 1 hour and see what it's doing. See, I like that setup. But the move's already kind of happening now, so like I wouldn't jump in now. That's the problem. At this point, the move's already happened, so it's too late to get in. Like most of it's already happened, and you're right there at that 200 moving average on the 1 hour. So this is exactly where I would be taking profit. But that's an excellent, excellent trade. Like if you got in on this early this morning, like that's a fantastic trade because the setup was there. You could see that we were setting up a low, a lower low, then a higher low. So you have basically an inverse head and shoulders right here. I'll go ahead and draw this for you guys. Dude. Perfect inverse head and shoulders that you can see on the extended hours chart. This was a nice setup. And you had the lowest volume in the chart. This is also important. Seeing the lowest amount of volume in the chart happening right at the bottom where it previously had support. This is right where the most volume happened in the chart. So there was tons of volume that happened here before. So you know buyers are interested in this area. So the fact that the volume was so low here, huge conviction of a bounce at this point. You've got a really good area of support here. Once it drops below that $5 level, like that's beautiful. That's a beautiful trade. If you got in on this thing under $5, you made out great. Right here is right where I would be thinking about taking profits on options. If you're in shares, you could probably go for continuation if you're willing to wait for a while. But right now, it looks like it's going to probably start cooling off. You've got some resistance here with these crossing MACD. You've got these crossing moving averages, and the MACD price cloud is just about to touch outside of its area. It might get up to like maybe $8 here if you're trusting the 1 hour MACD, but the RSI is like red hot right now. So gotta expect a pullback in the near term very soon. So for me, too late to get in the move. If there was a pullback to maybe $6 and then a RSI bounce with bullish divergence, I would take that. So if it comes back down and retests this layer of support and then starts to set up another, like if it starts to bull flag from here, I would probably get in on the breakout of the bull flag and take that to $8. That would be a great trade as well. Hey, Devlin. Yeah, I'll check out BBIG. Let me catch up with everybody. Let's see. Tip Flickering asks, Apple, do you think it closes the gap to 138? I'll take a look at that really quickly because I was checking Apple. Actually, what I think is Apple it's got a diamond bottom pattern here. This is hard to see, but I put on extended trading hours for Apple. I think that we're actually starting to see a bounce in Apple. If you don't have extended trading hours on, I saw this as well. This is actually an inverse head and shoulders for Apple. And Apple's going into its best earnings season, like seasonally speaking, ever. The Q4 is the best the best sales season for Apple. So this is exactly when I would not be going short on Apple. Will it close the gap in the near term? It's possible. That would complete this right shoulder on the head and inverse head and shoulder. As well, that would retest this channel that it's been trading in since August. So right now, I do think that Apple is hammering out a bottom. I'm nervous to short it right now. I would hold off on shorting it and instead look for opportunities to get an entry into a long position and ride this for the holiday rally, because right now Apple has tested its 200 period moving average on the 1 hour chart. Looks like 3 times now. It tested it here, and a second time right after that. And now we're getting that pullback, that healthy pullback that it needs in order to build up that strength and build support for another move to the upside. I did the opposite last time. I made the mistake of going short on Apple right here when I saw this bear flag break down, and I got killed. I got annihilated on that. That trade took me way too long to exit that trade, and I didn't get out until like all of my puts had expired, worthless basically. So that was an example of a big mistake on shorting Apple during a seasonally strong sales period, coinciding with a seasonal bull rally season for the market overall. Numbskully says that Rev is halted. Revlon halted. I see it's halted down. What's going on? Or did it halt this morning? Oh, news halt. Interesting. Yeah, I remember that 7 days ago there was a court order or a court ruling that their creditors who had requested to have a review done on the bank error that resulted in Revlon having a bunch of its debt wiped off its books. And when that happened, like this thing just shot up that morning. It was kind of wild. Oh, it happened after hours. Interesting. Well, anyway, Revlon does seem to be hammering out a floor. Keep an eye on that for me, Numbskully. Okay, SPY executed my stop. So let's see what happened. All right, so we just got a double bottom on the SPY, and it just got stopped out. Okay. See, that's why I wouldn't have traded. That's why I don't like that setup. I didn't like that setup, and I shouldn't have traded it. Because my stop loss should have been up here. It shouldn't have been here in the middle of this. It barely got touched, but it did get touched. I don't know. I think the TradingView just executed me early. I think TradingView gave me a bad execution. Well, it definitely would have hit it just then, so never mind. It doesn't really matter. What I'm seeing on this, though, is that there's really weak volume on this move, so that doesn't seem normal. This is the same thing that happened when it was ripping up like this. The volume was declining as it was pumping. So this is probably just another stop loss hunt trying to take shorts out and then take the next shot to the downside. So I'm going to go ahead and re-enter that short position. Now we've got a better setup. And I'm going to take this all the way down to 362.01. Still not my favorite risk to reward ratio, but we'll take it anyway. And we'll go ahead and go a little bit further out. We'll add a little bit more juice to this one. Come on. Go ahead, fill me. Give me a fill. There we go. Okay, we got the fill. And now I owe somebody a review of BBIG. Okay, so BBIG. First thing that I see is that we have a tweezer bottom on the 1 hour, very bullish. That shows a floor of support, and it coincides with this dragonfly, this bullish dragonfly doji. This actually is a double bottom pattern right here. We see that we have these candles entering into this zone. If we get a close outside of this zone to the upside, then that confirms a double bottom. So what we would like to see is for this green candle to come back, close a body, and engulf this red candle before it. That would actually be two bullish patterns together. That would be a 3-line strike because we have these, you see these 3 red candles back to back to back. If we get a green engulfing candle that takes out this red candle, that would be very bullish, and that would close our 1 hour candle on a big up move at the end of the day. It really does need to come with bigger volume than this. This volume is too small. It's actually declining, which we don't like to see. So we need to see big volume come in, and for this big volume candle, or for this volume candle to close up above all 3 of these red ones. That would be the best scenario for BBIG. I know that this is getting smashed because Susquehanna doesn't want to pay out all of those call contracts that they sold at market. So they're trying to keep BBIG below $1. What we need to see is for BBIG to close well above $1. What we want to see is for BBIG to close like way up here above 102. What? BBIG? BBIG is not delisted? Who's saying that? Anyway. What's Biora up to? Biora is not really up to that much. There's not much that I can really say about Biora, although I did get the news that they were going to be attending a conference where they're going to be discussing, they're looking for partners. That would be fantastic. Oh, I almost forgot. I have been meaning to make this announcement on the channel, so now seems like a really great time to do it. I want to announce the addition of a new moderator to the Discord and the community. Numskully. Numskully's been with us since December, literally since we opened up this Discord. So huge shout out to Numskully. He's been with us for a long time. He's always been a great member of the community, and he recently volunteered to work for the Goon Squad. So everybody give him a big round of applause. And Numskully, you now have official moderator privileges here on the channel. So feel free to abuse that and, make everybody fear your wrath.
Don't ban me, bro. Don't ban me.
I think I actually need to also make Logical Chaos a mod as well, because I forgot to do that when we made you an analyst, dude. There we go. Now we're all on the same page.
This is scary.
Honestly, I probably just made a huge mistake making Logical a mod. He's like possibly the least responsible degenerate I have in my Discord, but we'll see how it works out. We'll work this out on a trial basis.
Nice to meet you, everybody.
All right. Let's check back in on the SPY. Yep, we're getting that big push, and now the volume is tapering off and the price is going nowhere. So that's pretty much the rejection I was expecting. We'll see what happens if we get another push back off of this 20 period smooth moving average on the 3-minute. If we get a nice big red engulfing candle, that's continuation for me. I'll add back to my I'll add a little more to my short position to go ahead and take back that money from SPY. I just did not have a good stop loss set. That was really dumb of me. I should have waited for the better entry, but I had a feeling it was just going to start taking off to the downside on this bear flag. It ended up not. It found support here somehow. So it bounced, and now they just took out a bunch of stop losses, myself included. But at least this is paper money. We're learning how to trade. We're learning how to avoid those rug pulls and getting killed by market makers just trying to take our cash. Let me
If
go.
you zoom out and look over the last couple of days, it's still underneath some of its resistance levels. So like you still could see this downturn
Oh yeah.
come later on.
Oh yeah. Yeah. There's resistance. Actually, the price where I entered in was at a resistance level, right where we were
Yeah.
trading gaps. So now that we're back below this again, like fair chance that we see 362 again. That's what I keep looking for, is for us to hit 362. I've still got time on these, so I mean, it's really hard to trade this chop, let me tell you guys. It's like really difficult to trade this chop. I know that day traders are, you know, a lot of you guys that have been doing this for a while that love this kind of volatility when the market is going up then down then up then down in a range where it's like somewhat predictable. But like look at these gaps. You have to overnight swing these all the time. And like if you were trading this as a structure in the beginning, like how would you know that this thing is going to just suddenly gap up then gap back down? I don't think anybody could have seen this diamond pattern forming on the SPY until it was already there. With how gappy the SPY's been lately, like I feel like it would have been better to just not trade this week at all. These past 2 weeks have just been freaking brutal. So hard to read.
Yeah. I mean, you almost have to take out that Thursday CPI day and the day after. Like that was a freak occurrence that just happened because the market was so oversighted to one way. Like that's not normal price action. Like that caught everybody in the entire market off guard at one point.
Yeah. Stuart A says, I'm voting for Paddington Bear to be our next prime minister. Oh, man. I don't know. Like, Paddington Bear's got nothing on Liz Truss. I think that she's probably the best at destroying a market. I don't think you could have picked a better candidate to just annihilate everybody's money. That must have been like a world record. How to get fired from a political position of power in 45 days or less. Let's keep an eye on Revlon. I want to see what happens coming out of this news halt. I guess we'll find out. If Rev doesn't get delisted, then that would be honestly amazing. Like if they can keep it going. Getting some financiers from a new pool of investors, I think would probably be the best outcome for Revlon at this point. It's going to be difficult for them going forward without some fresh cash coming in to get out from underneath these freaking snake banks, man. Revlon's got a really, really long road ahead of them, and if they don't have some like good-natured investors that are willing to wait out the turmoil, then they're going to have a hard time getting past this. I got to go clean up some of my chart. Actually, I'm just going to go ahead and wipe this. This all is really old and needs to go away. Okay. All clean. APRN, please. Sure. Black Funeral 666. We'll go ahead and take a look at Blue Apron. So this is actually a pretty rough setup. What you have here is what I call a fish hook. I don't know what anybody else calls it, but this is a fish hook pattern to me. Very similar to a bear flag, but they break down quite spectacularly. And I think that it's because it makes a great bull trap, tricking people into getting going long very quickly. But what I'm seeing here is looking at how this is traded. You have this huge gap down, right? So everybody's looking for it to fill this gap, but the continuation of this entire pattern shows that the MACD was gathering strength and moving up while the price was in massive decline. And then the price continued consolidating to the side as the price was moving up, forming this huge bear flag. Now, what I've seen with these types of moves is that not only will it take the length of the flagpole, but it will sometimes go the entire length of the gap as well. For Blue Apron, this would probably be pretty difficult to do, just because it's already trading so low. But don't underestimate how brutal the market can be when a company like this is down on its luck. The other thing that kind of gives me pause here is that, unlike a lot of the short plays, the short squeeze plays that I've been looking at, is that normally on this volume direction candles, and we'll go ahead and we'll zoom in on this so that we can see just this. The volume direction candles, normally we'd see some big plateauing, right? You kind of get some of it here where the price is just goes way up on high volume and then goes sideways and basically nowhere, or the price is in decline the entire time. Let me minimize these other indicators so that we're just looking at these two. So this huge pop in volume came on a downswing. The price did lift pretty massively. It went up 60%, which was nice, but it gave up all those gains and it didn't maintain any of its previous levels of support. So Blue Apron has been in basically free fall all this time. You could say that there's been some plateauing, but it's not holding up support well. So this could actually get way, way, way uglier. And it's not that I necessarily would say that Blue Apron is a bad company. I don't know enough about them or how their services are, how popular their services are. But for me, Blue Apron kind of feels like a luxury service that most people are not going to pay for in this environment. Like hyperinflation is kind of what we're staring down, you know. We're in the middle of a train tunnel and we see a light at the end of it coming at us very quickly, and then now the horn is blaring. So we're trying to get out of the way of this inflation freight train, and Blue Apron is one of those services that is just really expensive and really unnecessary for most people. So I don't see this being a good market for them. And that's why, like, I appreciate that everybody's looking for all of those opportunities to capture the short squeezes to save a good company. But this is just one of those situations where the company is in the worst possible market and trying to sell to the worst possible demographic under the worst financial conditions that it could possibly be in. And it doesn't help that they are in a load of debt. So right now, where financing is out of the question, investors are nowhere to be found, and the price has been in constant decline and they're hemorrhaging money, I don't think that this one is a good long bet. If anything, I would be betting against it. I'm just being honest. I'm really sorry. I know everybody wants a short squeeze out of this one, but I don't see it. I'm sorry. This one would be so hard to squeeze. There's no financial conditions that are in the favor of this company. And it's sad because, I'm sure that it's, a great service and all. But there's no one to sell to. Nobody wants their services because nobody can afford it. It's not the same situation as like AMC where a recession is the perfect environment for them because everybody wants to go and escape and find something to, keep their morale up, go out and have some fun with a cheap date. That's a movie theater. Blue Apron is like literally paying for somebody to arrange a meal for you and ship it to your house. And that comes at a high cost premium. So that's just how I look at Blue Apron. And I'm sorry. Someone says, "There goes the Discord. What's happening? Am I going to have to go and interrupt something? Is is everything breaking down around us?"
No, they're probably talking the fact that you made us mods.
Oh, that did come back a while ago.
I just now caught that.
Benny Hill would be a great prime minister if he wasn't dead. Midterms fueling the S&P. Seasonally speaking, that doesn't really line up with what seasonal behavior of the market acts like. Right now, as we're going into midterms with an existing presidential candidate or a Democratic president, this is actually a pretty bearish season for us to be in. We got a couple of pumps in October, but late October, like the last 2 weeks of October, is when things start to like fall out from under us, and the market just like hits new lows or at least retests previous lows on average. So this is, if anything, we would see a big drop of like -2 to 4% movement in the SPY and the rest of the stock market, especially in the risk-on sectors. And then once we get past that, once we get into November, like right as election season is coming to an end, that's when the pump begins for the holidays and the Christmas season because the sales go up. And everybody's like, okay, election's over. Like everyone's attention is off of that now. And then suddenly the market's okay again. It's really weird, but this is what I'm actually expecting to happen. So to say that this is a pump that's happening just because of presidential or of just because of midterm, like doesn't really line up with history. Gratchagul wants to look at RAD. Rite Aid Corporation. Ouch. Ooh. Rite Aid got smashed. Okay, so yeah, Rite Aid's not doing good. Couple of things. Let me put all my indicators back up here. All right, so volume direction candles show that the bull run that it went on here was about it for the company. It's trading below the volume slow moving average, and we just rejected off it again with this latest high. And this is pretty much a double topping formation coming off of a huge bear flag. So that rejection right there spelled doom for it, and the last thing that it had to hold it up was this support. It broke that without stopping. It looks like earnings were terrible as well. Yeah, earnings were pretty bad. They gave up an additional 13 cents on earnings per share. They beat on revenue slightly by about 1.3 million, but not enough to hold them up. I'm imagining that their inventory and expense problems are catching up with them right now. And I think that inflation is probably hurting them quite a lot. The volume direction candles are going very bearish. It looks like there's they're due for some consolidation at the very least. So you might get another bear flag form here, but if it gets to $5, that's pretty much like the last opportunity to get out of any long positions unless something serious changes for the company. As far as I'm looking back this past year, their earnings have been less than stellar. This is not a good sign for them. It was like a slight improvement on their earnings, but not enough. This was really bad. Yeah, their earnings have been in decline for a while. They haven't been making money. They haven't been making nearly enough money. So, yeah, if you're currently long in it, there may be an opportunity to exit closer to $5 and then try to get into short positions, see how it shakes up, and keep a close eye on the financials. For this company, the big thing seems to be that their profit margin is just so thin. So there needs to be something fundamental changing in their company and the way it runs. Look for a big cost savings initiative. Look for them to get rid of debt. Unless those things happen, I don't think Rite Aid is going to come out this next year any better than they are going out of it. Let's go ahead and catch back up with Revlon. I still want to see that. Okay, nothing happening just yet. Let's go back to the SPY. All right, we're starting to go into profit now. SPY's gotten its rejection on the 15-minute at the very tip of this diamond bottom pattern. Like, this is the scariest pattern for me to be playing short on right now. I would not like to be. I would much rather be long on the SPY for the rest of the year and like just buy calls on the SPY that expire January 2023 or something, and just try and catch that pump. Because right now, this diamond reversal pattern is actually like a really scary pattern to play. Because what can happen is the exact same way that we came crashing down from on high since mid-September is the same way that this thing can start ripping up, and it can happen really unexpectedly. As far as like technicals dictate, it's just that it's really confusing now because the economic situation is just so bad. Like, everything is so bad, and the Fed, every time somebody starts talking about there being like, yeah, the market's gonna turn around, let's pump it, and then the Fed's like, yo, we're still hiking rates, and everyone goes like, no, and keeps begging them to stop. Like, they're not going to. It's such a conflicting time to be in the market. Hey Ronald, we briefly covered it. We're not exactly sure what the news is, but we do know that there is a news halt. Senseonics needs to announce 12-month monitor announcement before November earnings. It's been a long time since I've looked at Senseonics. I'm still holding on to every single one of my shares, but honestly, like I stopped looking at it. This one for me was just like, buy it, forget about it, and just let things happen. I'm kind of wondering if the company's just going to be bought out and then all of their technology will be sold to Dexcom or some asshole like that. Like, watch Dexcom go buy Senseonics out of all their intellectual property and all the executives just scatter to the four winds. It's just such rough going for Senseonics. It's at least above its moving average on the volume direction candles. So I know that accumulation is still happening here. Like, there's still big whale investors that are still accumulating shares in Senseonics. So that does give me some faith that it's still a good company. What I'm worried about is that it's a good company being bought by a bad company that just wants to destroy their intellectual property so it doesn't conflict with their business model. Already covered FNGR, Mackenzie, if you want to go ahead and head back in the stream. I don't remember exactly where we covered that, but we did definitely talk about it early on in the stream. Somewhere around... I'll find it for you. Yeah, that was asked for probably about 40 minutes ago. Like within the first 15, 20 minutes of the stream is when we would have covered that. Pixie is 1,051% hard to borrow. I think I understand what you mean, but that statement doesn't make sense, Bobski. I'm going to go look at Vortex, and I'm going to go see what Pixie say. 1,051% hard to borrow. Utilization is at 100%. I see that. Cost to borrow percentage on average is at 898%. That's kind of insane. Let me go switch screens over here. I want to go look at Vortex. Hello, Vortex. All right. So they got a 62-point short score. Short interest of the free float is 1.22%. What is going on with this? Something's happening. Did they like reverse split or something? It's like super low volume. Let me go look at Pixie on TradingView's chart. Ah, yeah, they reverse split. That's what happened here. A 100-to-1 reverse split? Dude, that's bad news bears, man. That's not good. You can't trust Vortex data on this one. Like, there's no way it's accurate. There's no way that they can keep... And it's not their fault. Like, it's just feasible. It's totally infeasible for them to have accurate data. Don't go based off of... Don't go long on this for a short squeeze just based on that. That's not... that won't work. The data is way out of date, and there's numbers being shuffled around. They're going to have to, like, go in and manually fix a lot of it. They announced their reverse split. They got a huge pump out of it. It went up like 200%, fantastic, and then every single whale took their profits and got the hell out. That's all that happened here. I wouldn't go long in this right now. It's got much farther to go. The RSI is still bearish and it's consolidating on these lows. I do see a lower low on the RSI with a higher low, or a lower low on the price with a higher low in the RSI, but it's screwed up big time by this reverse split. I wouldn't trust any of the data on this. For me, this one is one to stay away from for a while until they get past their delisting violation. And then we might be able to talk about like a short squeeze or something like that, but I'm not going to touch it until all that data is fixed. That's going to take a few weeks. You'll probably have to be waiting for a little while on that one. We'll go back to the SPY and go catch up with that. Still kind of trading around resistance, but looking a little bit better every minute as we go by. I'm thinking that we're starting to print that head and shoulders I was waiting for. There it is. Yeah, see, all we had to wait for was this. And we got a retest and then drop down. We'll see how the day ends, but I'm probably going to close this position regardless and get out today out of this paper trade. Just because there's not really much in it for me to swing it overnight and there's too much risk to hold on to it, because if it ends up gapping up tomorrow, I can't get out. Like, my stop won't execute after hours, so I don't want to be in that trade overnight. So if you don't have access to after hours trading, or if you're doing a paper trading account like this, that's something to be conscious of. You need to know that if you're not going to get execution on your stop loss for whatever reason, like if there's a gap up in the morning, you don't want to be in that trade. You need to get out of it while you have access to that. And if you're in profit, all the better, because that way you're not taking a loss. Even though I lost on the first trade today, I would rather just like take a little bit back and just get out of the trade to eliminate the risk. So if this doesn't come down and hit my price target, I'm getting out today no matter what. Ruben says the Fed should keep their mouth shut and do what they need to at their meetings. I mean, their job is literally to manipulate the market to do what is necessary to protect the economy. So that's kind of a tall order to ask, but I understand what you mean. Like, we would rather if the Fed would just shut the hell up, but it usually doesn't work like that. Okay, SPY is really having a hard time now. We'll see if we end up catching ourselves at this support here and bouncing up to this shoulder level. That's still what I'm waiting for. Nile? Oh man. I don't wanna be involved in Todd Alt's bullshit anymore, man. Nile's getting pummeled, man. It's getting hammered, and I don't want to be involved in it anymore. I'll cover the ticker as a courtesy, but seriously, like, this company is so sketchy. This guy's premise for this company is that we totally have a Bitcoin farm, yo, trust me. Trust me, bro. And we're profitable, trust me, bro. I like how they estimated a $24 million revenue. Where did that even come from? Where did their revenue even come from? Financing? I'm going to guess financing. Income statement, total revenue. They definitely didn't sell anything. Their operating income is still awful. Where did their income come from? Like, where is their revenue? Am I blind? Where is the revenue? Like, I don't see any revenue.
I mean, it's a tall alt company. Maybe they just don't have any.
Well, it says that they had total revenue 49 million, and that's what it says. But like, I'm looking at the income statement and there's nothing here. All I see is a mess of operating expenses, and I see no source for the income stated anywhere. Like, I don't see any revenue statement in here. There's no positive revenue on this sheet. Am I blind, or like what is going on? Where is the revenue? Because I don't see it. It's not there. I'm serious. Like, somebody correct me. Where's the revenue? I don't see it. I was looking at their income statement, like, total operating income is negative 21.7 million. Where are they getting this 49 million profit from? I don't see it here. It's just not there. I'm done looking at this. I give up. I give up. It's not here. I think they just wrote the number on and they just said, there's the money. It's there. Trust us. Like, I literally, there's nowhere stated here on the income statement where the money came from. It's just magic. There it is. Oh, here's the cash flow statement. Maybe it's in here. Financing activities. There's where the 49 million came from. Issuance of stock, sale of common and preferred stock. That's where their money came from. They're diluting. There's no money. There's no money here. This thing is just diluting itself to death. Classic Todd Altman.
He made money off of selling the selling retail stock and selling stock to what is this another one of the ones that's in like the loan that what's it called, the type of loan that's just eating them away, the like what Mullen was doing, like the predatory loan, like the one that's like if you can get have the right to. You have the right to sell us shares at any price. We're not allowed to hold more than 10%. So every time it gets to 10%, they dump them all onto the market, and then they issue another bunch of shares to that same financing company.
That's pretty much what they do. But like all of the like Nile, Nile is owned by the guy that has a stake in the financing companies. So like he's financing himself to sell air. Like that's all that this is. Like the dude's just selling air. The shares don't mean anything. It's literally just sheets of paper. Yeah, it's not revenue. It's cash income from financing activities, which is code for we diluted the fuck out of it. That's what that means. Jeffrey Times. Listen, I'm not saying that I think that the Fed is doing a good job at protecting the economy. I'm just stating that that is their job. Factually speaking, that's what they're supposed to do. Are they doing it? Hell no. Like they have totally botched this thing and screwed the pooch 6 ways to Sunday. They screwed up so badly.
They're not very good at it right now, but I mean, they're trying.
I'm not interested in doing any Bitcoin farm schemes, man. I'm not investing in that shit right now. Bitcoin is tanking, and people are selling off all of their assets. I'm going to wait for everybody to get sick of watching their Bitcoin portfolio drag down to nothing, and then I'll go buy my ass like $10,000 of Bitcoin or something like that once it's like dirt, like bottom of the barrel prices.
We've been in this like 20,000 to 18,000. Like we've been playing in this range long enough that the next leg down might be coming.
Yeah, and the next leg down is like $9,000.
Yeah, I think I had support somewhere around 13. And if you get underneath that, like, oh man, it's not good.
Yeah, it's not a good time. Not a good time. All right, we got a bot to go and get rid of. Slay the bot. Does Numbskully or Logical, whichever of you guys, like, I command you to slay the Tinder-hot.xyz bot.
I don't think I have the ability on YouTube.
You do. I gave it to you.
Okay. Now I got to learn how to do this.
Slay the bots on my behalf. I'm so tired of these things. They're obnoxious, man. Like, who even looks at this? Like, what is this supposed to do? Yay, there's a dating site that I got off of a YouTube channel in the chat at random. I'm totally going to go to this sketchy ass domain. That seems a safe thing to do. Who clicks this? Like, you can't even click it. You have to copy paste that and put it in your URL bar to go there. Doobie-wah, give me the power. It's all dudes. Yes, it is. It is really all dudes. Quagmire. That's an amazing gift, Persephone. Thank you. That is awesome. Okay, what the spy doing? Just die already, spy. Die, spy. BBIG hold for a long time? Yes, I hold BBIG for a long time. I'm incredibly bullish on BBIG. Not even necessarily for a short squeeze, although the metrics are there for it to be squeezed. My investment thesis on BBIG is that it has access to one of the largest emerging markets for social media demand in a country that has banned TikTok, and they have literally the only app in India and Southeast Asia that has the demand for that and the capability and the infrastructure to replace TikTok. Like, I know that the app has its problems and it's not a it's not a perfect it's not perfectly built out yet, but you know, it doesn't have to be. Like, Facebook started looking like a really junky off-brand MySpace, you know, and it still overtook it. And like, everybody goes like, "What the hell is MySpace now?" Which makes me a little bit sad, to be honest with you. But you know, it's all the same. The way I see it is that BBIG is looking to be a new differentiator and adding a whole new platform for people to get to, which honestly we need more of. We do need more competition in the social media space, because every single time that something starts to get off the ground, then Facebook or Google buys it, and then it's just dead. And they go ahead and they over engineer it. They screw up all the features and all the things that people loved about it the most, and then it dies and it's no good anymore. That's how I feel about Facebook. Like, I didn't even want it in high school, but like, everybody was getting into Facebook, and I just didn't care. But it became so necessary because everybody just had to have a Facebook if you were going to communicate with them. And I was one of those outcast kids that didn't get invited to parties because he didn't have a Facebook, and I just refused. So like, that kind of thing is how powerful social media can be, in that it literally takes over a generation in how they communicate. And TikTok started doing that too. The danger with TikTok is that it's blatantly malware. It's so dangerous. So Lomotive, I think, could end up doing something very similar if it builds itself up correctly from the ground up. And since it's owned by a separate entity, a totally different company with people that are interested in creating their own standalone business apart from Facebook and the others, and actually be a real competitor to them, that is the potential that I see in Vinco Ventures and Zash Global Media Group combined. How is the TA on Spy Weeklies? It's pretty mixed right now, but we'll go take a look at the weeklies. I've been watching this a little bit, but it seems to me that we're hammering out a bit of a bottom on the weekly chart. It's really conflicted because of this like diamond reversal. You see, we've got these closing bodies and tall wicks on the weekly. I'm actually going to adjust these so that it respects the bodies and the wicks of the candles. Change this up a little bit. Okay. So what I notice about the SPY on the weekly chart is that we've got two possibilities, right? My thinking is that we'll end up with a holiday rally where in November, the SPY is going to start moving back to retake these previous levels at like 380 or 370, 380 or thereabouts. The struggle, though, is that the SPY, when it came down here and created this first low in June, was that it established a layer of support that it traded at very briefly, and then it got above it and then created this floor that it hammered out over the course of a month and a half. And then it went ripping to the upside. Then it came crashing back down, and in a single week, it cut through that area of support, and now it has become resistance, and now we're trying to break through the ceiling instead, and it's much harder to fight your way up through that. So that's why, like, in the near term, I'm pretty bearish and a little bit torn, to be honest, about where we're going on a daily basis. But I think that once we actually break through this level where we get over this these levels of like 365 and 370, that we'll see the SPY return to heights and we'll get support here and start moving up in this channel up through November, December. And we'll have some opportunities to take profits again up in this zone. And I'm basing that off of the megaphone pattern that SPY has been trading in for literally the entire year. Like since January, this has been forming and it's been pretty consistent. And these levels are basically like 98% correlated with the 2008 Great Financial Crisis crash. The crash that happened from 07 to 08, this matches up with so closely, it's scary. And we just now established the lower low that if you compare 2008's spring to summer rally, see, we rallied in the summer here. Well, the SPY actually back in 2008, this would have been January through April of 2008, and then in June, July of 2008, it started coming down really hard. And then it had one last rally that kind of did like a little boop, just like a really little hill, but it had established a lower low. You can go back and look at the 2008 chart. I've shown this so many times, I don't want to keep flying back and forth to it. But that lower low on the market that came about halfway down its megaphone pattern where it found support, and then it just one little bounce, one last little hurrah rally that happened in the summer and ended in August. And then from that point on, it was September and things were just collapsing from that point on. And that was when the SPY went into total freefall. That's kind of what I think we're going to do, in that we're setting up that lower low before our next rally, and we're going to get that little boop, and then we're going to fall off a cliff. That's where I think we are at. And the market is not suited to tolerate that level of capitulation again. And that's why I think that what we're going to end up seeing is far worse than 2008, where by the time we go into the spring of 2023, we're going to see the SPY return to like sub 300 and possibly go down into this range below 250 to 260 or so. For me, like the absolute maximum bottom that I see the SPY going to over the long term, and this, for all I know, could take years to play out. And this is like a full-on second Great Depression scenario, is that we would end up seeing like 200 on the SPY once again, and actually like touch the bottom from the COVID crash and stay there, and have to slowly work our way out of a very long neutral market. And that's kind of what I think is going to happen. For right now, the weekly is showing me that we've got this megaphone pattern set up here, and that we need to test the top of it one last time before the continuation occurs, and we see the megaphone pattern play completely to the downside, which if you stretch this out along the bottom of these candles' bodies, takes us all the way down as far as $200 on the SPY. And if you go along the wicks or the bodies of the SPY at the top, then our next resistance is somewhere around between 380 and 400. And that's where I think the cap is for this rally if it ends up coming this winter. We got 10 minutes left in the market, and right now the SPY is getting one last juicing before the close. Kind of annoying because I wanted to cash out of this paper trade at a profit before the end of the day, so I'm a little annoyed. But at the same time, it is finishing out that head and shoulders that I was looking at on the 3-minute chart, so who knows, maybe I'll get what I wanted. What happened to this? What did I just do? I messed up my head and shoulders pattern. That was funny. It must have been something I did with when I was messing around with the weekly chart. But anyway. So this is the this is the completion of the head and shoulders that I was talking about. If you are holding on to some puts that are expiring this week, just know that tomorrow is probably going to be the last day. If we do end up seeing a big gap down and we end up opening around 362, 361, I wouldn't hesitate to take profits at that level. That's an excellent place to take your profits. If we end up opening around the same area where we were before, then I would expect us to trade sideways for the first part of the morning, maybe see some early morning selling, and you could try to capture that volatility. If we end up gapping up and just soaring to new heights, then I don't know what the hell is going on. Because, for all I know, this could be a triple bottom pattern, and all of my technicals are wrong. We'll just see what happens. But either way, I'm waiting for this. I'm waiting to see this last shoulder play out and see if the market dumps last minute at the end of the day. And I'll try to exit my position in profit. It looks like it's basically break even, so, kind of sucks, but it is what it is.
I'm afraid to grab puts into the close for tomorrow because we're sitting at that bottom trend line still.
Yeah, it's hard to say. This chop has been cutting people to ribbons lately, and I'm really, really hesitant to make any changes. I'm still of the opinion that we're going to get a rally into December, and as long as I am long for that length of time, then I'm better off. That's kind of how I see it. I just think that it's better to go long on the market for that distance. Dude, SPY, you piss me off sometimes. This is just finish your pattern. At least finish your pattern. Whatever, Watch this print an evening star and just get absolutely smashed at the very last minute of the day. I just have a feeling. I have a feeling that's exactly what's going to happen. Well, this is my stop for this position as agreed. I'm going to go ahead and exit the position with the last 6 minutes of the day. If it's going to go back down, it's probably not going to be enough to make it truly worth my while. But as I said, my thoughts on the market for the long-term trajectory is that, and long-term being 3 months, I think we'll see a market rally, particularly in risk-on sectors. Earnings is going to be really crazy right now, so there's going to be a ton of chop in the market. I don't think anyone really truly well and has a clue of what things are going to do. But I will say that I'm pretty bullish for Snap earnings. So I went and dropped a position on that just to go ahead and give myself a little bit of exposure to it. Take a small risk with this one because you never know. But the way I look at Snap is it had this pretty brutal gap down, and it's got two gaps above it with some really good opportunity for it to, one, fill that gap, and two, for it to impress with earnings. And considering that we've seen some turnaround in some of the other social media companies, like Meta, I kind of expect to suddenly turn the market around with a bullish earnings very soon. We've got that coming next week, so I'm kind of expecting Facebook to just suddenly come out with new news and turn things around on the market from them. I'll be watching that a lot closer, but it's for me, it's just kind of a hunch. Just looking at where they're currently trading in their chart, with them bouncing off of these lows, this is a new level of support. If it ends up breaking down further, then I'll just get out of the position at a small loss, and that's fine. I will take my loss. It's not like I'm super convicted in Facebook or Meta or whatever. I just see them at this level, and this is a really good area of support where I see the potential for them to make a new leap to the upside if things start looking any better for them. Part of my reasoning for that is like Netflix took a huge profit on this swing. It wasn't my full take profit, but I did get out the very morning after. You see, I got a small position early on Friday, and then I got another position right before the close, and it gapped up huge, and I took an easy 2-to-1 risk reward profit. So I just went ahead and took that off the table. Semiconductors, I see some potential for them as well, and Amazon, I'm also expecting them to come out with positive earnings. And with them trading at they came off of a higher low since their previous earnings. I'm expecting a better earnings coming into Q3. As well, I expect their guidance to be a little bit more optimistic going into the holiday season. So if they update guidance and it looks good, I would expect the market to respond positively. And then once the Fed comes out and has to remind everybody, hey, the tightening is still happening, then it'll fall apart. But for right now, I'm expecting to capture a little bit of upside volatility and capture that profit in the short term, and then watch the market drop again later on in the week. But that's how I'm playing each of these earnings individually. Is I'm expecting market sell-off going into the earnings, and then a big pop after the earnings are released. Let's go back to the SPY for the last 2 minutes of the day. Heads up, you got 1 minute and 6 seconds left in the market. This is your opportunity to make your final decisions. Good luck to everybody.
Fun fact that I just looked up, they're expecting the gross GDP for quarter over quarter to go up, like to be positive at the end of October.
That's hilarious.
It was negative in May, negative in June, negative in July, negative in August, negative in September. And then for October, they're forecasting positive 2%.
I saw that, and I don't understand where the hell that's coming from. That makes no sense to me. I knew it. I knew they were going to drop the market right at the last goddamn minute. So annoyed. Whatever. I'm out of the position. There's no point being angry over it. Ding, 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 ding. That's the close. Congratulations, everybody, on another trading day. Hopefully you've had a successful one. If you didn't, no worries. We've got more days ahead of us, and there's always new opportunities to take advantage of. So, outlook for tomorrow is Snap earnings will be coming out, I believe, in the morning. Is that in the morning, or is it happening tonight? It's tonight. So, Snap earnings will be coming out very soon. I'm probably not going to be able to stick around to cover the earnings, but if you guys want to jump in the trading floor, you're welcome to hang out with any of the other traders who will be covering those earnings, and we'll see how things go. Just a reminder, I went long in Snap, just a very short-term, low-risk swing, just to give myself a little bit of exposure to these earnings. I'm thinking social media is going to respond positively as people are starting to emerge in the world. Coming out of the pandemic, there's going to be a lot more social interaction between people, and Snap is one of those consistently good performing social media platforms for people to talk back and forth that's traded on the public exchanges. And in my opinion, people are trying to get away from Facebook any way that they can. Let's see. Revlon news. Haven't seen any of it yet. Uh-oh. Uh-oh. The real Tony Smith is coming in with some interesting TikTok news for us. So this is a little bit unexpected, maybe a bit surprising. Get out of here, Forbes. TikTok parent ByteDance plan to use TikTok to monitor the physical location of specific American citizens. Uh-oh. This is big for BBIG. The project assigned to a Beijing-led team would have involved accessing location data from some U.S. users' devices without their knowledge or consent. A China-based team at TikTok's parent company, ByteDance, planned to use the TikTok app to monitor the personal location for some specific American citizens, according to the materials reviewed by Forbes. The team behind the monitoring project, ByteDance's internal audit and risk control department, is led by Beijing-based executive Song Yi, who reports to ByteDance co-founder and CEO Rubo Liang. The team primarily conducts investigations into potential misconduct by current and former ByteDance employees, but in at least 2 cases, the internal audit team also planned to collect TikTok data about the location of a U.S. citizen who had never had an employment relationship with the company, the materials show. It is unclear from the materials whether the data about these Americans was actually collected. However, the plan was for a Beijing-based ByteDance team to obtain location data from U.S. users' devices. TikTok spokesperson Maureen Shanahan said that TikTok collects approximate location information based on users' IP addresses to, among other things, help show relevant content and ads to users, comply with applicable laws, and detect and prevent fraud and inauthentic behavior. But the material reviewed by Forbes indicates that ByteDance's internal audit team was planning to use this location information to surveil individual American citizens, not to target ads or any of these other purposes. Forbes is not disclosing the nature and purpose of the planned surveillance referenced in the materials in order to protect sources. TikTok and ByteDance did not answer questions about whether internal audit has specifically targeted any members of the U.S. government, activists, public figures, or journalists. TikTok is reportedly close to signing a contract with the Treasury Department's Committee on Foreign Investment in the United States, or CFIUS. This evaluates the national security risks posed by companies of foreign ownership and has been investigating whether the company's Chinese ownership could enable the Chinese government to access personal information about U.S. TikTok users. Disclosure, in a past life, I held policy positions at Facebook and Spotify. In September, President Biden signed an executive order enumerating specific risks that CFA should consider when assessing companies of foreign ownership. The order, which states that it intends to, quote, emphasize the risks presented by foreign adversaries, unquote, access to data of U.S. persons, focuses specifically on foreign companies' potential use of data, quote, for the surveillance, tracing, tracking, and targeting of individuals or groups of individuals with potential adverse impacts on national security, unquote. The Treasury Department did not respond to a request for comment. The Internal Audit and Risk Control Team runs regular audits and investigations of TikTok and ByteDance employees for infractions like conflicts of interest and misuse of company resources, and also for leaks of confidential information. Individual materials, internal materials reviewed by Forbes show that senior executives, including TikTok CEO Shou Chu, have ordered the team to investigate individual employees, and that it has investigated employees even after they left the company. The internal audit team uses a data request system known to employees as the Green Channel. Doesn't that sound like a little bit extra sinister? That kind of sounds like Soylent Green or something. According to documents and records from LARC, ByteDance's internal office management software, these documents and records show that Green Channel requests for information about U.S. employees have pulled that data from mainland China. Like most companies our size, we have an internal audit function responsible for objectively auditing and evaluating the company and our employees' adherence to our codes of conduct, said ByteDance spokesperson Jennifer Banks in a statement. Quote, this team provides its recommendations to the leadership team, unquote. ByteDance is not the first tech giant to have considered using an app to monitor specific U.S. users. In 2017, the New York Times reported that Uber had identified various local politicians and regulators that served them a separate, misleading version of the Uber app to avoid regulatory penalties. At the time, Uber acknowledged that it had run a program called, quote, Grayball, but said it was used to deny requests to, quote, opponents who collude with officials on secret stings meant to entrap drivers, unquote, among other groups. TikTok did not respond to questions about whether it has ever served different content or experiences to government officials, regulators, activists, or journalists than the general public in the TikTok app. Both Uber and Facebook also reportedly tracked the location of journalists reporting on their apps. A 2015 investigation by the Electronic Privacy Information Center found that Uber had monitored the location of journalists covering the company. Uber did not specifically respond to this claim. In 2021, book An Ugly Truth alleges that Facebook did the same thing in an effort to identify journalist sources. Facebook did not respond directly to the assertions in the book, but a spokesperson told the San Jose Mercury News in 2018 that, like other companies, Facebook, quote, routinely uses businesses' records in workplace investigations, unquote. But an important factor distinguishes ByteDance's planned collection of private users' information from those cases. TikTok recently told lawmakers that access to certain user data, likely including location, will be, quote, limited only to authorized personnel pursuant to protocols being developed with the U.S. government, unquote. TikTok and ByteDance did not answer questions about whether internal audit executives Song Yi or other members of the department are authorized personnel for the purposes of these protocols. These promises are part of Project Texas, TikTok's massive effort to rebuild its internal systems so that China-based employees will not be able to access a swath of, quote, protected identifying user data about U.S. TikTok users, including their phone numbers, birthdays, and draft videos. This effort is central to the company's national security negotiations with CFIUS. At a Senate hearing in September, TikTok Chief Operating Officer Vanessa Pappas said that the forthcoming CFIUS contract would, quote, satisfy all national security concerns, unquote, about the app. Still, some senators appeared skeptical. In July, the Senate Intelligence Committee began an investigation into whether TikTok misled lawmakers by withholding information about China-based employees' access to U.S. data earlier this year. Following a June report in BuzzFeed News showing that user data had been reportedly accessed by ByteDance's employees in China. In a statement about TikTok's data access controls, TikTok spokesperson Shanahan said that the company uses tools like encryption and, quote, security monitoring to keep data secure. This is totally meaningless, by the way. Access to approval is overseen by U.S. personnel, and that employees are granted access to U.S. data on an as-needed basis. This is meaningless. Like that means absolutely nothing. The fact that the data is encrypted does not protect them from somebody with like domain administrative credentials and privileges. If somebody is, if somebody is in control on the China team that has superior access to any of the other administrators on the US based team, it doesn't matter. They can give that access to anyone they want, and there's literally thousands of ways that you can hide those privileges in a way that makes it basically undetectable unless you have a literal forensics investigation team dedicated to discovering this. So this whole idea that they're going to be able to separate privileges and keep only U.S. employees or U.S. customers' data accessible to only U.S.-based employees is total bullshit. There's no way that they can guarantee that. I can promise you that is a like it's possible to be done, but there is no way with the audit controls that the Chinese government would enforce on ByteDance that they would not be able to get access to that data at any point that they wanted to. There are always ways. If I can figure out a way to get to the top of an organization's privilege structure in their Active Directory domain, then their own administrators can figure out ways to do it. And worse, you can bet that the Chinese Secret Service will be able to do it as well. So there's no, I just don't accept this. Like, encryption is a freaking buzzword here. It has no guarantees of protection. It's unclear what role ByteDance's internal audit team will play in TikTok's efforts to limit China-based employees' access to user data, especially given the team's plans to monitor some American citizens' locations using the TikTok app. But a fraud risk assessment written by a member of the team in late 2021 highlighted data storage concerns, saying that according to employees responsible for the company's data, quote, it is impossible to keep data that should not be stored in China from being retained in China-based servers, even after ByteDance stands up a primary storage center in Singapore. Lark data is saved in China, unquote. That's exactly my point. The data, once moved, can't be taken back. There's no guarantee that you can ever recall that. Oh, did I see Snap is down? Aw, that's a bummer. That's a huge bummer. All right. Well, we'll get back to that in a little while. I'll go ahead and finish this article. Excuse me. How much longer is this article? We're almost at the end. Moreover, a leaked audio conversation from January 2022 shows that the Beijing-based team was, at that point, gathering additional information on Project Texas. In the call, a member of TikTok's U.S. Trust and Safety team recounted an unusual conversation to his manager. The employee had been asked by Chris Lepetak, TikTok's chief internal auditor, to meet in an LA area restaurant off hours. Lepetak, who reports to Beijing-based Song Yi, then asked the employee detailed questions about the location and details of the Oracle server that is central to TikTok's plans to limit foreign access to personal U.S. user data. The employee told his manager that he was, quote, freaked out by the exchange. TikTok and ByteDance did not respond to questions about this conversation. Oracle spokesperson Ken Gluick said that while TikTok does not currently use Oracle's cloud services, quote, we have absolutely no insight one way or the other, unquote, into who can access TikTok user data. Quote, today, TikTok is running in the Oracle cloud, but just like the Bank of America, General Motors, and a million other customers, they retain full control of everything they're doing, unquote. This is true. Oracle does not control the keys of their customers. They have structured themselves specifically this way, and I'm aware of this because I have worked with Oracle's team. I have done business with Oracle's team. I know how their cloud structure works, and this is totally transparent, by the way. Like, I'm not giving up any proprietary information. They're very open about this. Oracle makes sure that it is well known that all of their customers' data is maintained by their customers' keys. They have access to the data, and only they have control of how the data is protected. And that is good for Oracle because it protects them in terms of like plausible deniability, but also the liability is not on them if something happens and the keys are lost. Oracle is not responsible for that. They simply provide the infrastructure and the storage. TikTok is in charge of how that's secured and maintained. This corroborates a January statement made by TikTok's head of data defense in another leaked audio call. In that call, the executive said to a colleague, quote, "It's almost incorrect to call it Oracle Cloud because they're just giving us bare metal and we're building our virtual machines on top of it." Yeah, this is literally exactly what I said. Gluick made clear that this would change if and when TikTok finalizes its contract with the federal government. Quote, "But unless and until that's the case," he said, "Oracle is not providing anything other than our own security for TikTok." TikTok did not answer questions from Forbes about the status of the company's negotiations with CFIUS, but in a statement to Bloomberg published earlier this morning, TikTok spokesperson Brooke Obervetter said, quote, "We are confident that we are on a path to fully satisfy all reasonable U.S. national security concerns." Sure you are. I just trust me, bro. We'll meet the national security standards. That's totally fine. Their app is malware. TikTok is malware. I'm just saying it. Okay, it's malware, and they're trying to hold on to any excuse that they can. Oh wow, that's so they're so funny. They're so funny. Okay, well, it looks like Snap is getting punished in after hours. I'm assuming that the data is out. Let's go ahead and see if I can get my hands on that. If anybody has a link in the trading floor, I'd really appreciate you dropping that in the live stream chat or live stream questions. Seems like Revlon is getting spanked also. Is that my understanding?
Revlon is suspended.
Revlon is suspended. Okay.
By the exchange due to the bankruptcy.
Gotcha. So this will be a delisting and a restructuring.
Yep, it's getting delisted.
Gotcha. All right. Well, thank you for the update, Numbskully. Unfortunately, that will mean the end of Revlon as we know it. If you are able to get out of your positions, the following, if it comes out of suspension at any point, then I wish you luck. I've been out of Revlon for well over a month now. I think the exit happened back in mid-August when the market started to turn around. So at this point, it looks like this is the end of the makeup company as we know it, at least their current stock. Rest in pepperonis. Let's go ahead.
Snap for you there too, TD.
Oh, thank you, Num. So Snap's Q3 adjusted EPS is positive 8 cents, beats a 0.01 cent deficit. And they beat sales 1.13 billion over an estimated 1.12 billion. I'd say that's a meet. I would say that they met estimates. Quarterly earnings are coming in positive. This is a 52.94% decrease over earnings of 17 cents per share from the same period last year. The company reported quarterly sales of 1.13 billion, which beat the analyst consensus estimate of 1.12 billion by less than 1%. This is a 5.72% increase over sales of 1.04 billion the same period last year. So that's a bit backwards. The price is in decline, so there must be something else in there that includes like some negative guidance or something that's causing this reaction. I'm not sure why it's selling off when it did beat expectations, but we've seen the market do way weirder things than this. So this may just be a knee-jerk reaction, or it could be somebody that's trying to just get their the volatility jacked way up. Interesting. We've seen these things turn around though. So for me, this was like a super teeny tiny play, not a not like a high conviction play. Seems like my earnings calls on Tesla and Snap are not going well so far though. The least that I can say is that Snap, I got my entry early on this week, so I got a little bit better of a price. But if it opens up down here, then I'll still end up getting stopped out with a huge loss on that one. Let me go and get that. Let me go and get that 8K filing so that we can look at that. We'll go cover the BBIG 8K because I'm seeing people like throw the D word out there now. So we gotta really look at this.
No, it was more, they had to do a filing in Nevada, but they also had previous 250 million shares that they decided to exercise, 245 to common and 5 million to preferred.
Okay. So for everybody that's here with the BBIG community, I'll clip this out into a separate video. I'll do the ByteDance TikTok article and this 8K dissection separately, and you can you'll be able to look forward to that coming out this afternoon. I'll go ahead or this evening, depending on where you are. So Vinco Ventures 8K form. Let's go and take a look at what this is all about. Okay, item 5.03, amendment to Articles of Incorporation. Okay, October 14th, they filed an amendment to its Articles of Incorporation to reallocate its previously authorized 250 million shares of stock as 245 million shares of common stock and 5 million of preferred stock, which preferred stock may be issued upon the subsequent filing with the Nevada Secretary of State of one or more certificates of designation for series of preferred stock. So this is not dilution. This is reallocation of shares. So they're restructuring the shares that they already have. There were 250 million of common stock. Now they're switching that to be 245 million of common stock and 5 million of preferred stock. So the preferred stock, I'm assuming, is going to be used for a separate purpose. Maybe it will be given out as a special dividend to stockholders of their larger investors. I don't know. There's no way to know until they actually declare the use for this. But so far, no dilution. Like, this isn't dilution. They're just restructuring the shares. While this was initially submitted on October 13th, Nevada Secretary of State filing system was not processing on both the afternoon. Okay. Not really that important. They're restructuring shares, I assume for a later purpose, which we will find out in the future. If I was to guess anything, this is probably going to end up being issued to insiders as a bonus incentive program.
At the time of the merger, right?
Yeah. Once the merger occurs, I would assume that there's going to be an issuance of stock to insiders to incentivize directors for their investment in the company.
Thank you, Casual Fool.
Cool. Okay. So this is definitely nothing to be worried about. If anything, this is evidence of the merger going forward, because this restructuring ahead of issuance of stock is occurring very, very near to a merger discussion. This is probably setting them up for issuance of bonus shares to their insiders. Certificate of amendment to articles of incorporation before issuance of stock. The undersigned declare that they constitute at least 2/3 of the following board of directors. Okay. Authorized shares have been amended. Rod Vanderbilt is signing director on this amendment. That's it. Nothing crazy. I would treat this as evidence of the merger going forward, especially with, oh, you know what? I know what this is going to be for. They're going to be issuing those this is what I bet is going to happen. They're going to issue that $5 million in preferred stock, and they're going to hand it over to Ross Miller because he's the new CEO. This is probably part of the bonus incentive program. That's who they're going to give it to. They're going to give it to Ross Miller. So he's going to get shares in order to incentivize his tenure at the company. That's what I bet this is for. Yeah, definitely nothing to be worried about. They already had these shares available. They were they were already a part of the company's treasury. If anything, this is something that they'll be. This would probably be able to be issued in the future, like as part of warrant issuance or something. Like they did have warrants at one time with Hudson Bay, and then they had to go buy those back because of the default that happened. Melamamus asks what happens to shares of Revlon. So Revlon shares will probably go away, or they will be restructured, and you'll get a much smaller amount of them. It's kind of like reverse split in a way, but the equity value of them is going to decline almost certainly, like 99.99% of a huge value decline.
Will it go to OTC?
If they don't relist with the exchange, yeah, it probably will go to OTC. Man, Snap got slayed. They must have said some really negative guidance. It's not a huge blow to me, but I do feel bad for the long investors of Snap. I did think that this was going to be the opportunity for a turning point for them. This kind of really changes my outlook for Meta and some of the others. If Snap is not improving their situation now, then I don't see how in the hell Meta will outperform them. That's actually quite shocking. All right, I'm going to go ahead and wrap up with a little bit of Snap pulled to Netflix.
Hey, TD, quick question for you.
Yeah, sure. What's up, Num?
What about people that were holding puts on Rev?
Well, puts would print. Puts will be worth quite a lot. So if you were holding on to some puts, you can hang on to those. You should be able to cash out of them, or you can exercise them, and you will probably get a huge payout. If those are in the money, I would wait for it to come out of its suspension, or if it goes to OTC markets, then your puts will be worth quite a lot, because those puts are still good. Think of puts like an insurance policy. If the thing goes to OTC markets and it's literally zero, then your puts are worth your puts are worth whatever the strike is if Revlon goes to zero. So if you're holding on to puts, then you basically made max profit, or you can make max profit, very close to it.
What about the expiry on them?
What I would say is talk to your broker, because your individual situation, I will not be able to help with everybody's individual situation. So if you are holding on to any position in Revlon and you have questions, especially if you have options, especially if you have put options that are now in the money on a gap down, you'll probably want to talk to your broker, because they'll be able to help you with negotiating a sale of your position so that you can get out of those. If the market is suspended, the broker will be interested. And they'll be able to answer all your questions way better than I could.
Thank you, sir.
Yep. No problem. All right, let's cover the last of the market and see where we're going. So I was anticipating quite a lot from the market today. If it was going to perform at all to the bullish direction, and it didn't. It gave up literally everything that it had gained over the last week. So now we're going into some pretty heavy earnings, and yeah, I think it's going to be a rough week in the market. I think it's going to be a little bit scary. So we've got not only Snap, we've got CSX Corp, we've got Boston's Beer Company, ticker SAM. Who else do we got? We got BJ Restaurants, we got Robert Half International, Bank OZK. Who else do we have here? First Financial is reporting their earnings tonight. Their revenue was expected to make a 10% growth. Banks do pretty well in this environment with high interest. Like, this is where banks really make a lot of money. They're pulling all their cash out of the equities market, and they're just making tons of cash in the money market and off of interest. So I'm betting that a lot of the banks are going to be posting a lot of beats. They're probably just absolutely loving this shit. Verizon is reporting earnings tomorrow morning. American Express is reporting their earnings tomorrow morning. They are expected to outperform big time. I would certainly anticipate American Express doing really well. This big sell-off seems suspicious. There's a suspicious sell-off here at the end of the day today with American Express. We'll see how that goes tomorrow morning, but yeah, credit card companies have been doing pretty good. Who else do we have? We got Simply Good Foods and Siffy. Simply Good Foods is reporting earnings in the morning. They're not a huge company, but I'd say it's at least notable, with them being a $3 billion. It's a mid cap, or, well, I don't know. Does 1 billion qualify as mid cap or large cap? I think it's mid cap. And then we got Siffy. Whoops. That one's also reporting earnings tomorrow. This is the Siffy Technologies Limited. It's a pretty small company. Their profit margin was thinning the past couple of quarters, so things were getting really rough for them. So I'm waiting to see if they start rebounding. This is like one of those little penny stock companies trading on the NASDAQ. If they've got any new bullish news to give out in the morning, this one has the potential to turn around, because they're in a foreign market. They're mostly based out of India, Southeast Asia and stuff. Let's see, who else has earnings? Okay, those were all the companies of interest that I had that I was looking at for earnings. No shot at looking at DTC. I could look at DTC for you, dude. I gotta go soon though, so this is gonna be my last ticker request. Okay, DTC solo brands. I don't know this company, so wholesale distributors. Well, they've been beating on earnings. So good for them. Their profit margin is slipping though. What does this company do? Solo Brand sells online outdoor products. Its products include Solo Stove fire pits, stoves, accessories, Chubby's apparel, folding portable kayaks, Isle paddleboards. All right. Okay, I can see why you're interested in it. Now that the pandemic is over, people are like going out and trying to travel, but at the same time, like I'm thinking, high inflation and stuff, people are like really hesitant to go and spend money on unnecessary stuff. So this one's kind of tough for me to make a call on. As far as the technicals go, there's well, they move with the market pretty consistently. With this being the very close to the bottom of the market for the year, I could see there being some improvement in their stock for the holiday rally. And this does look like a diamond bottom to me. Kind of a wonky diamond bottom, but it fits the profile. So this is a reversal pattern. When it breaks out to the upside, it tends to go it tends to break the length of the largest down to up move on the breakout. So on a breakout, you would trade this with a measured move to this upside. That's kind of how you trade this. Hey James, yeah, you did miss the BBIG 8K stuff. I covered that before about 15 minutes ago, less than 15 minutes ago. All in all, it's not a whole lot. They're switching some common stock from 250 million of common stock to 245 million of common stock and 5 million of preferred shares. So they're converting some into preferred shares. Preferred shares that I assume are going to go to Ross Miller. They didn't explicitly state that, but since they're restructuring those shares, I have a feeling that they're going to give them to Ross Miller as an incentive bonus program for joining the board. But it's not a dilution if anybody's worried about that. So if you hear dilution or anything like that from people, just ignore that. That's not what's going on. So I would say it's like neutral news. It's not a big deal, but maybe you could see it as slightly bullish because it indicates they're going forward with the merger and making Ross Miller permanent seat on the CEO position. So that's kind of how I would look at that. Flintster says, if Snap hits $5, I'm getting in calls tomorrow. That would be way oversold. think it'd be crazy if it went down to $5, and I would agree with you. That's way oversold for Snap. Okay. That's it for these tickers. I'm gonna cover the large caps, or rather, I'm gonna cover the SPY and the Qs one last time, and then we're gonna go ahead and close out the day. So we are completing this diamond reversal pattern here. I think that we got one more day of slippage where we're going to see the SPY drop down and retest lows one final time. So if we get a gap down in the morning, or if we close down low tomorrow in order to knock out any calls that were expiring this week, that's the scenario that I'm seeing. But more likely, the most likely scenario that I see for us is that we sell off early in the morning and market makers try to dupe a bunch of people into getting a bunch of puts, and then they switch long on the market and rip it back to the upside, get all those puts to expire worthless, and try to carry the market in a bullish direction close to the at the near close tomorrow. So I'm kind of expecting for tomorrow for the market to do something like this. We open up down here, and then we kind of like go sideways and then rip at the end of the day, and maybe take out these previous highs right here. That would be my expectation for tomorrow. But I'm looking for a gap down that and a retracement down to around the 362 level. Take profit in this area and then catch a long bid going into the holiday rally. We'll see how things go. We are in a diamond reversal pattern right now, and we're right at the tip of it. So this is a really sketchy, uncertain time for the broader market and the SPY. Risk on sectors were pretty mixed, so it's hard to tell where the market is going right now. But what I would say is that seeing that utilities are red, energy was mixed, and health technology was red, I would say that that's an indication that the defensive sectors are less attractive, and we're seeing money come out of those areas of the market. Those traditionally defensive sectors in the market are where people put cash in order to protect it, where they expect the market not to do a whole lot, and then they go and start putting it into risk-on assets like technology, finance, retail, things that are more volatile and exposed to market economic conditions. So if we do end up seeing that, a little bit of that next week, where all these utilities and defensive sector stuff start selling off, if that drags the SPY down enough, then we could see some buying the following week, pushing tech and finance up a little bit higher. But right now, things are all confused and choppy because of earnings, and people are trying to play it in both directions like crazy. So it's really hard to gauge. Okay, so that was my forecast for the SPY. The Qs are a little bit. The Qs are looking much more bullish. They're holding up way better. I took an entry on the Qs down here back when we retested this floor at the bottom of this diamond pattern that we formed here. And as you can see, we're way up on that position. I've been swinging this one for, we're going on 3 days now. So huge win so far. I should probably put a stop loss a little bit higher to take profit if it does drop again, but I'm not going to. This is a paper trade. I'm going to let it play out, and I'm going to see how my strategy works out for me. If this one works out and we see the Qs pump to 280 by mid-November, then I'll be really happy with this trade. Okay. looking at the Qs on the daily, we can see that we hit our, excuse me, I had to cough. We can see that volume is starting to come out of the Qs. And because we had this big green candle on the day that CPI data came out and the market just suddenly surged from that moment forward, like from that morning on when it gapped down, it completely overtook and engulfed all of those previous candles, was really strange to me. But it definitely indicates bullishness. And now the Qs are just kind of hovering around resistance where these lows were before. We did get some pretty big wicks on these daily candles though, so it seems like it's having some trouble fighting through that ceiling. We've got some really tough resistance right here that we're trying to break through, but seeing that we are this far into it and that we've already made a 50% retracement on the fib, that gives me a little bit of confidence that we'll see continuation next week. So I expect a negative close on Friday. We'll see the SPY close down from today's close. But I think that the best opportunity to take profits will be in the morning tomorrow on any short positions, and then use that as an opportunity to go long in the market or start scaling into a long position in preparation for the end of year seasonal rally. Same situation as with the SPY pretty much. But I would say that I think the Qs are going to probably outperform SPY this season. Let me see what else we've got. I think that's going to be... Oh, I'll cover XLRE too. XLRE has been hammering out a bottom as well. My puts on DRV are actually doing okay. They're not the greatest right now, but I'm with the target of November. I've actually got some targets for the I think it's the 18th of November. So this is a important day for me. I'm basically long in XLRE by being short on DRV because it's an inverse index. So I'm trying to capture that. I'm trying to capture those moves. And I feel like XLRE is forming a bottom here at the end of the year. It created a new low, and now it's trying to find new support somewhere in this level. I expect it to find that support at 34 and then 35. And if it can retake these positions, then that would be the best outcome, where I could see XLRE returning to $36. But honestly, even if XLRE just trades sideways for the rest of the year, that would still be a winning trade for me. Just trading a put on DRV that's at the money and just having it expire in December. Naturally, the price of DRV will decline if XLRE just does basically nothing. So that's kind of the trade that I'm looking at. Further to that, I'm also seeing bullish divergence on XLRE. We got repeating lower lows on the RSI, and we've got lower lows on the price with higher lows on the RSI. So this bullish divergence is quite encouraging. And now the RSI is approaching its moving average. It got rejected, but we have what here is called a rising 3. And on the weekly chart, we had a dragonfly candle. This is very similar to a hanging man, which is a bearish pattern, but it's flipped upside down. This is a gravestone doji, but it's showing up at the bottom of the chart, and we still have the rest of tomorrow to see where we close. So there is an opportunity for XLRE to close green on the week, and if it does manage to recapture 34.60, then that would be encouraging to me, seeing that the housing market and the REITs are starting to get a little bit of momentum going. If I do see that, then that'll give me enough conviction to stay in my DRV short position for the duration of the year. Overall, on the housing market, like for the long term, though, guys, just keep in mind I'm still very, very bearish. We've been selling XLRE for a long time. It's been a long time. We're down 30% almost on XLRE. The shorting has been really heavy on it, so there needs to be like a little bit of relaxation. Bears have to they get tired at some point, and we're seeing this kind of turnaround in the market across multiple sectors. So this is about the time where I expect the seasonal turning point to kind of overtake bearish sentiment, and we'll see a little bit of a pump in XLRE. Not a huge one, not a massive opportunity for a long trade, just like a little bit of relief for the bulls, maybe to retest this weekly 200 moving average. And then once I see us retest this, I'm definitely going to go short again into next year. So if at any point we touch this 200 weekly moving average again, that's when I go short all over again. So keep that in mind going forward into the next several trading weeks. November, December, I expect to be at least decent for the XLRE, all the stocks on the XLRE index. Okay. That's going to be it for me. I'll do some separate coverage later on this week and over the weekend to cover individual tickers. We'll probably cover other big large cap stocks like Apple, Meta, and so on as we get closer to their earnings. But for right now, this is going to be it. Thank you guys so much for tuning into the stream. Really appreciate having you here. If this is your first time here and you really enjoy the stream, don't forget to leave a like on your way out. It really helps the algorithm. Subscribe to the channel so that we can feed you more information and provide more teaching materials to everybody so that we can all learn how to benefit from this market together. And if you're not a member of the trading floor, consider joining. We've got a great community full of really great traders and excellent teachers that are willing to show you the ropes and get you familiar with how to trade the right way and start making the market work for you. You can join us at hellstradingfloor.com. Sign up for our Discord at discord.gg/hellstradingfloor. Thanks again for watching, and I'll see you guys next time. But until then, have a hell of a time in the markets.